Hi everybody, it's John Seville from Acorn Wealth here, and here is your executive summary for the day going into Open Range Friday. Tomorrow is going to be a key day for the market following a big drop today, so very important to be aware of what we could be expecting to come. So firstly, let's talk about today's drop. This was what was coming and has been building ever since early June. If you have a look at the S&P 500, I'm just going to get this other stuff off there. Let's just remove that for a moment. If you have a look at the S&P 500, we've been setting up in a complex head and shoulders. So two left shoulders, two right shoulders, and the head in the middle. For those of you who are following along in our call on the market on Tuesday, we said expect a 40-point drop from the breakout point to the support that we set earlier in the year. And of course, so this is what we called on Tuesday. That's exactly what we had happen today. We had in fact, it was a 39-point drop. But rather than splitting hairs, this is where we're at. So the complex head and shoulders pattern has now played out. Now, we also had increasing volume, 4.28 billion over yesterday's 3.46. So we now find ourselves at the support point, which is also the same level that originally the market broke out from earlier on. So can we expect a dead cat bounce? I would expect so. I think that we could have a rally back up to the 1950 area or somewhere in between. This is where we find the 50-day moving average. So there could be a dead cat bounce here. So tomorrow, the key here is looking for either short-term bull plays or perhaps an opportunity, in fact, to find stocks rallying back into resistance as potential short candidates. So I've gone through the scans. I've probably looked at 400 or 500 different stocks quickly, and these are the ones that actually came back as the as possible viable trades for tomorrow. Just before we do change, I talk about open range. Tomorrow is the first day of the month, so this is going to be a very important day as well, because whatever range the market sets tomorrow is the predicator for what's probably going to happen for the rest of the month. So what happens is tomorrow is the range for August, and then whether we break below the low or whether we go above the high come Monday will tell us whether the market is going to hold on to its previous bullish move, or if it breaks lower than the low of tomorrow's trading, we could have a big drop for August's month for the first 3 weeks. So let's go across and have a look at some of the stocks. So on the bull side, for those of you who are looking to play the aggressive side of the market, SNCR, Synchronous Technologies. This rallied up above its 12-month resistance. This flagged, so it shot up above and has flagged at 41, creating the bottom of the flag. It appears at 39, which also is that support zone. So looking between that $39 and $40 range is a possible entry. If this flag plays out, we could be looking at $43, $44. The extreme of that move would be $45.50, but given the bearish sentiment of the market, I expect that will be difficult. And I'd be looking at kind of a stop loss position, certainly at that 38.69 area, giving it a bit of room to move. So there's about a $1.30 of risk there from where we're currently trading at, but about a $4 potential reward. Moving on, CNTY, also a very short-term potential long play. And so here it is on the screen. And the reason why I like this is you can see it's got this downward consolidation falling wedge. So a falling wedge is bullish in sentiment. You can see that the smart money or the money flow has shot dramatically up. So great divergence on that. And you've got a nice little pop as you squeeze between these moving averages. You can see the stock wasn't affected badly by the big drop in today's market. It actually went up. So this does have potential of at least a 5% move up to that trend line, possibly higher, but from 550 where it currently is up to 576 looks realistic, and potentially further than that as it approaches that resistance zone. But for a short possible in and out trade for Friday, Century was one that I liked also on the bear side. Now to look at the bears, let's look at stocks that are breaking down. So 3M or MMM, you can see this money flow dramatically shooting off. The warning signs were here already as the divergence came in, as the stock went higher and the money flow went lower. And you can see that we've shot straight down through that support zone of that channel today. So a rally back into that 142.90 or above. Looking at the 9-day moving averages at 143.84. So yeah, between 142.90 and 144, there could be a potential entry zone where that, if we've got a rally up, that could be an optionable trade. Looking at the 140 puts, or of course a stock trade. So the 140 puts would be the ones I'd be looking at on a September expiration. And if we have a look at what those are trading at, we can flip over just very easily to Yahoo Finance. We can punch MMM in, and we can see that we've got on the September side. Give it a little bit of push of the room out. The 140 puts here. Looking at about $3.10. Big jump in them, up over 30% today, or more. So a rally back up tomorrow would give us a little bit of a better execution price, or potential execution price there. Alright, what else? Let's go to IBM. Now IBM, massive insider selling across the board. If we flip over to Insider Cow, you'll see that this is reflected in the insiders. You can see selling, and all of that, in fact, has been in the last couple of days. Look at that, just selling across the board on the 29th, and all of those were filed today. So big insider selling, and IBM, if we want to break this down, is actually in a potential head and shoulders pattern. So if we look at this, if you look at this pattern, just going to delete these other lines here. If you look at this pattern and you connect the tops of those two peaks correctly, and then duplicate that line on the bottom side, you've got a you got a bit of an obscurity here, but otherwise you have a possible head and shoulders pattern, which would mean that we're actually curving that shoulder at the current time, and it gives us a target of short term down to this kind of one. Let's extend that down to the 180. I'd be looking at the kind of I look at this big shot up here as a key area, so 181. So we're looking at 181 down from 191. And if you then duplicate that head and shoulder from the breakout point, you can see, where does that take us? That takes us down to here. What's the relevance of that level? Well, if we go back, you'll see that this level there was the point that the IBM really shot straight up from back in late 2011, September 2011. So a very important point, and possibly where the high frequency trading is driving it down. The other point that is also relevant is that not only have we reached a head and shoulder, but we've also broken that trend line. So where we're currently at, or if ideally we get even a rally up to the 193 level, there's good value and potentially an option trade there. Looking at IBM options, what I was interested in was the 170 puts. And if we go out to September, you can see those 170 puts at 38 cents. And so they had a big rally up of over 30% today. So if we get a dramatic drop, and if you can get those cheaper tomorrow, we could be looking at a possibly 10 times your money or much more, even if it only gets down to the first type of target area. So I'd be looking at this area down here of a 183, but possibly this could be even worse. This could get or better for a short, down to 163. All right, what else have we got on the spectrum? We've got gas, GAS, natural resources, really hurting today, breaking its support line. This would also be something I'd be looking at. A lot of moving average support, but the natural gases have been weak, and it's broken down quite considerably. I'd be watching this during the day. as this may rally up and hit this kind of moving averages around 52, but gas is looking weak as well, and the money flow is indicating that as well, shooting sharply down, showing divergence across the board. ADS is the second last one. ADS again. This is broken its trend, broken its support line, and ADS has actually got heavy insider selling. The 22nd of July there was heavy insider selling, and looking at the 250 puts currently priced at 302. The 260 puts currently at 790. But this one has, this is in the tech sector, and that's just starting to turn. It was one of the last leaders to drop, and you can see the volume is has started to increase as well, doubling its volume of the up yesterday into the down today. And finally, AXL. AXL also is in the in a weak sector, and which is the industrials, and you can see that has also broken down, creating a double top here. And if we measure from the neckline to the top, we've also got lower highs, which is ideal in a double top scenario. If we measure that down, you can see that the target there would create a zone down here, which is also the support previously around 1730. So a possible short here on AXL from around currently where it's priced between 1839 and 1850. Resistance from above is at 1893. So yeah, I'd be looking at a stop loss above there around $19 or 1907 to use the odd numbers, which is also above these other moving averages. So at 1907, that provides a protective stop, and there's a potential about $2.40, $2.50 drop where I'd be looking at as a target. Okay, well, that's a lot of stuff to digest. I hope it helps you watch this for tomorrow, and we'll see you all next week. Happy trading and good night.